Welcome to Good Business San Diego. I'm Roy Robertson, and with me again today is Brent Wilsey, who is the president of Wilsey Asset Management, an investment advisory firm based right here in San Diego, which gives investors direct access to Brent and his team. You can meet some of his team and learn about Brent's individualized concentrated value portfolio in a free on-demand webinar that's available this Thursday. Brent, here to talk about that, here to talk about your strategies, and most importantly, we always talk about investor behavior and how it leads to some level of performance or underperformance. That's what you're talking about this month.
Sure, and actually things are crazier than ever, Roy, because what we have now is we have a lot of traders coming to the market that have never been there before. You got these gamblers that before could not gamble on football games and basketball games. They're starting to trade. People at home during the day, they're starting to trade, and the same thing is happening back in the tech boom. People are trading, have no idea what they're doing, and on top of that, Roy, they also have it to where they're now doing options and saying this is so easy, and that's the scariest term ever because they don't understand what happens with options, and it's a very scary time. That's why in the workshop, the webinar, we do a 19 thoughts of trading, and every single time I go over that, people say, yeah, I've done that before.
Right, so there's a caution here for sure. Don't get over your head and don't do what it is that you're not equipped to do. That's what your firm does, right? So let's talk about some of these tendencies that lead to this underperformance it's not inevitable. You just need to know what you're doing and turn to the right people for advice.
Yeah, and unfortunately, what people do when it comes to trading, they'll make a decision based on the stock price. So if it's going up, they should buy it. If it's going down, they should sell it. They're not looking at the value of what they're paying for something. It's kind of like if you go to the department store, you go online, you don't buy something when the price is rising. You wait for a discount. You wait for it to go on sale before you buy it. When it comes to trading, you're kind of sucked in. You keep buying these higher and higher prices. Not a good way to make money long term.
We also have the tendency to kind of rationalize. We really need to do something, even if it's the wrong thing. We do the wrong thing at the wrong time, right?
Yeah, and actually what traders do is they'll justify bad decisions so it makes themselves feel better, right, as opposed to analyzing what they did wrong. They'll say, oh, well, that was going to happen anyways, and this and that and so forth. So they make excuses for wrong decisions, which justifies bad moves. And long term, again, another thing that destroys their performance, basing things based on virtually, bad decisions you try to justify.
And of course, one thing that we seldom look at is tax considerations and ramifications there. So talk about that a little bit.
Sure. I mean, the tax, because when you're doing a lot of trading, Roy, what happens is that you are generating a lot of capital gains. And these are not long-term gains. Long-term capital gains are taxed more favorably, about 20%. But when you're trading short-term, what's happening is that you have a short-term capital gain, which is ordinary income. It can really make a big difference, especially if you're doing a lot of trades during the year. And this is an easy year so far, it seems, to do a lot of trading. So profits are there. When April 15th comes around next year, people are going to say, oh my gosh, I can't believe how much I have to pay in taxes. They lose a lot of their gains, if they had gains, to taxes.
So Brent, we've just got under a minute here. Let's talk a little bit about the individualized concentrated value portfolio and what that is, what people will learn on Thursday.
And this is more what we favor because what we're looking at is actually investing in businesses, and we're saying let's invest in this business for the next 3, 4, 5 years. It's a value company. We don't want to overpay for it. We're not going to base our decision based on if the stock price is rising. Yeah. We're going to base it on value. What are we getting for our dollars based on the earnings of that company, the balance sheet, and the cash flow and so forth. So we want to get something good for our money, not just buy a stock just because it's going up.
A longer range view of this, looking at the fundamentals and doing all the research. That's what you do best, right?
Exactly.
Okay.
Very important.
Webinar's coming up on Thursday. It's on demand. It is free. You do need to register now at smartinvesting2000.com. Wilsey Asset Management invites you to tune in this webinar by registering at smartinvesting2000.com.